What other inefficiencies do you see that can be exploited? We've heard in the past about the preferred opportunity in preferred shares in Korea. Does that still exist?
It exists a lot, actually. But before I explain about the preferred and common, we have other types of the mispriced opportunities. These days, many companies are split it into holding company and operating companies. It's actually a more transparent way. But in many cases, holding company holds just one large subsidiary. So basically, they're the same. So the stock price of those, the holding company and subsidiary should move in the same way. But that's not always the case. So sometimes the holding company lag the price of the subsidiary. We find many opportunities because people only focus on preferred and commons, but we have this opportunity too. And if you look at preferred and commons, there is a gap that eventually the gap will be narrowed, but we don't know when. But there are two ways for the gap to be narrowed. The preferred, it could go up, but the common, if the business is as bad, then it could go down. So it's not it's not the right strategy just to buy the preferreds, because we have to look at the business itself. So if it's solid, it's okay to buy preferred, but other than that, there's a chance that the gap will be narrowed by the common price going down.
Also, you want to pay attention to the features of the preferred. For example, if it's convertible, sometimes definitely that's a sort of easy opportunity, but sometimes a lot of Korean investors view them as sort of more of a bond rather than equity, meaning that they're just happy to pay a little bit more dividends, but with no voting rights, sometimes permanently discounted. So you have to kind of look at more carefully as to what are the features. But so I know that a lot of foreign investors got burned by buying preferred share, waited for a long time, but the gap never got narrowed. But things will change, because I mean there's inefficiency, because a lot of Korean investors I noticed, they don't like buying preferred shares.
Usually they are liquid. Koreans don't like illiquid stocks.
And like emerging market people, they like you said, I mean they're more interested in following the index, so they don't have patience to. And also a lot of mutual funds in Korea, their performance is usually compared almost every month. So for them, it's hard to wait for a year or two, even longer, to have the gap to be allowed. Whereas our investors are more, they're more patient, they're more value types. So we can sort of be long-term investors. But a lot of the investors in Korea, especially domestic ones, they tend to be more short-term oriented.
Just to step back a bit, so to value the holding company, the preferred opportunities, why do they even exist? So you talked a little bit about the holding companies, so why, just for a layman who may not be familiar with the market, so why do these structures exist?
It's difficult, actually, why they exist, but they exist.
It's mainly because, for example, the people could be more the general public or the retail investors, for example, they are more familiar with the sort of the subsidiary company, meaning that there's a company called Amore Pacific, which is a well-known cosmetic brand in Korea. So people know about this company, but holding company could be called Amore or some name that could be a little bit different from the real the company name. So people know that this company is great, and then people will flock to that specific stock, not really paying attention to the holding company because they're familiar with that name. But at the end of the day, if the subsidiary or the actual operation company does well, then basically the holding company's value should be increased, but it sometimes takes some time for market to recognize. So there's always time lag, typically.
And for example, it was back in 2001 or maybe 2000. There is a big company. It's one of the largest companies in Korea, and it had convertible preferred shares, and it's convertible into commons in in 2 years. And the stock price below the half of the common shares, it's ridiculous because if you buy and hold that stock in 2 years, so because that's more than 10 years ago that's when I first started value investing. So I thought that maybe there's something I don't know, but no, there was nothing. So eventually, it went up. So sometimes there's no reason, just people just don't recognize
right.
the obvious.
And the value investing concept is relatively new in Korea, meaning that there are not too many people like us or value investors are active. So,
right, yeah.
so those opportunities are there, but just people don't take advantage of it.
Gap is not narrowed quickly. So in the U.S., for example, there are many value investors. So you have to be a cheetah to. But in Korea, being a sloth is okay. No problem.
Yeah, so that's
it's
why
an easy market and easier.
We say that the Korea is gold mine for value investors because there's just so many inefficiencies for no reason, and you can take advantage of it, and more people come in and take advantage of that type of inefficiency, then the price will get near the intrinsic value. But right now, there are not too many.
I guess back in 1930s when Benjamin Graham first talked about value investing, situation here probably is similar than the situation in Korea right now. Right. There were many cheap stocks and they stayed cheap for long. But once the value investing concept spread out, and it just disappears.
Could you give us an example of a situation of a company that exemplifies your approach that you see as core to how you like to exploit opportunities in the Korean market?
There is a company, it's a cosmetics company called Amore Pacific, and it's the market leader in Korea. And its premium products are very, very popular, not just in Korea, but in China too. The Chinese tourists, these days a lot of Chinese tourists come to Korea, they buy lots of the cosmetics of that company. So the company has a strong potential just outside of Korea. We knew that, but we looked at the stock price. It's not really that expensive, but it was not that cheap. And it has a holding company, and the holding company has many different businesses. But this particular cosmetics company comprise about more than 80% of the total value of that company. So the stock prices of those two companies should move similarly in the same direction. But we found out that was the case before the financial crisis in 2008. But after the crisis, somehow the price of the holding company didn't catch up with the price of the subsidiary, the cosmetics company. So it has a strong growth potential, but the holding company is too cheap. So we decided to buy the holding company. There are two chances of the stock price of that company going up. The narrowing the NAB can get the narrow, and also the company itself grows. Has a lot of growth potential in China and in other parts of Asia. So it turned out one of our successful investments, and we still hold the holding company. But we probably wouldn't buy at the current price, but we don't like to sell at the current price too.